Welcome to Open House, the real estate and mortgage show on News Talk 580 CFRA.
If you have any questions about mortgages or real estate, give us a call at 521-TALK. That's 521-8255.
Or text 1-800-580-CFRA.
With Frank Napolitano and Paul Rushforth, here is Steve Gregory.
Here we go.
Good
what
morning.
What are you guys laughing at? I'm afraid to
ask.
Well,
I'm talking to Paul's camera here.
Well, because Greg's here recording the show, and you know, it goes back to my assistant Jocelyn, and so Frank likes to say some things in the camera to Jocelyn before we start the show. So,
and even though he's been here before, you're back again for more punishment.
I enjoy that. That's why I referee.
What's easier to referee?
He gets less booze here. He likes this. Like, he doesn't get booed as much here.
They're more direct, though.
Yeah, more direct, yeah.
I can boo you. I think you suck, Reader. How's that?
Thank you. I'm used to that. 25 years, I'm used to that.
Yeah.
Between Frank and Paul, I couldn't handle it alone anymore. I needed to bring in a ref.
That is true.
How was the week that was, Mr. Rushforth?
The week was good. It's been a very, very robust November. When the numbers come out, I think we're going to see that, even though our November of last year was not great. But I think we're going to see the number of sales are drastically up.
October was up 50%, correct?
46% was last October. This October number of sales was up 46%, over of October last year. And our average sale price is motoring along at 1%, very flat. And I think, once the numbers come out in November, I think we'll be very similar to that year-to-date numbers. I think we'll probably be, 1.5% average sale price increase. Number of sales will probably be similar to what we were in last month. We could be anywhere from, 30 to 50% up over last year, last November. I know us as a company, we're having easily our best November, but we're having kind of like our November month is very similar to like a July or an August. Like
Really?
Yeah, we'll probably end with about 70 deals in November alone, which is, I wouldn't say it's double, but it's we're usually around 40, 42, 45, so we'll be about 70. So, we go alongside the market, so I'm assuming the market's going to be, had a strong November as well.
You lead the market.
Well, I didn't want to say that, Steve, but thanks for saying that. But no, we do lead the market, but at the same time, I mean, usually if we're up, the market's usually up, and if we're down, the market's usually down as well. So I wouldn't be surprised to see that the number of sales were drastically up in the market, just like what we're seeing right now.
When do you see us going crazy? January, February?
Yes and no. I don't see us going crazy. We had some news, obviously, this week with Trudeau coming out with his wonderful GST plan, which is not going to help us mortgage-wise, rate-wise. I don't think. We don't know yet, but, I'll let Frank comment on this. But, they were saying half a point was almost like a lock-in, and now there's a lot of economists saying we're only going to go down a quarter point on the variable rate mortgages on prime. So, I
don't think that 2 months is going to make any kind of a dent.
I don't think it's to make a dent either, but it does shake optimism. And when people are ready for that half point again in December and, even hoping for another half point in January, at the end of January, a quarter point is great. It's awesome that we're going down, but it still could shake a little bit of optimism in this market. I think after the last drop we had, the half point in October, it could be the reason why it spurred on the November numbers. And I was thinking that, listen, if we can get a half point in December, we might have a very, very strong Jan, Feb, March, start to the year. And, inflation numbers, we saw them, very good this week at 2%. Take out housing.
Higher, though.
It's higher than the 1.6, but you take out housing, we're under 1%. I mean, so it's the numbers are trending in the right way until Trudeau opens his mouth and starts to, do what he did. Listen,
I'm not Canadians. Listen, he's helping me because he's going to help me for 6 weeks when I buy breakfast. A little bit of a break on GST. He's going to help me.
So we're trying to talk serious here, Frank.
Yeah, I'm serious. It's hitting my bottom line for sure. Yes. But it's so typically these one-time stimulus events like this one trigger inflation going up. If you could call
it that.
Well, whatever you call it, it does trigger inflation, generally speaking. So. Hopefully it doesn't put the number out of whack.
They'll take that into account, though, won't they?
Of course they would. They should, but who knows anymore. Listen, the markets have gone the other way around. The minute that they introduced this, the bond market went up. So unfortunately, if you've got a fixed rate mortgage or if you've got a maturity coming up, you're going to see that the fixed rate mortgages aren't as competitive today as they were a month and a half ago, since the election in the U.S. and now this news. So, we've seen bond markets come up at least 0.5 percentage point in the last 6 weeks, which is significant considering we should be going the other way. Doesn't mean that you panic and you lock in because rates are going to continue to go up. I think that trend will reverse. It's just going to happen likely in the spring. We're going to really start to see the rates drop in the spring. The new president in the U.S. is very, very adamant on low borrowing. So during his tenure, the first 4 years, he kept rates low. His plan is to get them low again. So despite some of the other stuff that he wants to introduce, which really tends to make the interest rates go the other way, I think he'll have a lot of influence on interest rates coming down because a lot of Americans are complaining that it's too expensive. Food's gone up. Mortgages are very expensive. Car loans are very expensive. So, I think he'll appease to them and he'll do everything in his power to bring interest rates down, which should bode well here in Canada as well, because we do tend to follow what they do.
Their optimism's waned a little bit too, though, Frank.
Sure it has.
They were very, very bullish on rate drops, and I know that's Trump's objective is to get those rates down. But a lot of these Americans, realtors that I hang around with, they were very, very bullish on rate drops, and now they're very. I would say they're kind of sitting on the fence, waiting and watching.
Well, tariffs, right? Tariffs tend to drive rates up. So if he follows through with this tariff plan, which already there's been some backing away from it for a lot of countries. So, I think his target is China. That's who he really wants to set the tariffs to. But if he does, then Americans are going to be paying more for everything else because they import so much from China. So it'll be interesting to see whether he actually goes through with it.
What will that do to us?
Same thing, right? I mean,
they're going to put tariffs on. Well. Yeah, they're going to put tariffs on.
No, I know, but what will that do to our economy?
Well, for us, I don't know that it's going to have a big impact for us. But what it does, it drives the bond markets up in the U.S., which in turn drives the bond market up here. I don't think it's going to affect our economy. Our economy is already sluggish. Let's call a spade a spade. A lot of good economists think that the move that he made this week was twofold. Number one, 9 months away, 10 months away from an election. So let's see if I can get some good, after the polls came out and showed that he was now tied with the NDP for second and third. So I think that came out. He's trying to get some good publicity over Christmas and sending $250 checks. That's one of them. But at the other end of it is he's realizing that our economy is sluggish. So he's trying to prop it up a little bit. He's trying to help the restaurants. He's trying to help the service so that they don't lay off as many people as are expected in January and February.
Yeah, but the best way to do that is to lower rates.
Well, lowering interest rates is one, but keeping employees is a big one. And hopefully by making going to restaurants more affordable, especially in January and February when all the layoffs happen, he's hoping that by having this break, it'll allow people to continue to go to restaurants and make sure that the layoffs are minimal.
You talked about the election coming up in October of next year and them doing
or
this,
sooner,
potentially sooner. Yeah. But them doing this now for this GST rebate for 2 months. I don't think it's lasting 2 months. I mean, you have an election coming up. I think this stays on for until election time, in my opinion.
You think so?
I think so.
No, I don't. Now there's a tax increase in April, so I don't know if the carbon tax is going up in April. So there's a number of tax increases in April. Those ones are the ones that I think he might delay because there's an election coming up. So he might push back on those ones.
Because this is up to a year of the election. This is like the best time. It's like broken promise time, right? This is where we promise everything and then we break them after election time.
That's
right?
Here's all the gifts you paid for.
Yeah, exactly. But you know what? Saying that though, Steve, I still believe no matter what happens in December, on December 11th with the rate drop, whether it's a quarter, whether it's a half, I still see a lot more optimism in the market right now. I mean,
it's obvious year to year, right?
It is obvious. It is obvious. And I still think that, most people that I'm talking to right now, they're convinced that rates are going to continue to drop, which is great. We know they are going to continue to drop. And people are starting to really get into that market. We are starting to see that first-time home buyer come back. We are starting to see that investor market to come back. Every week it's getting better and better and better. And, I think a half rate drop. Now, because it's December and January, it's probably going to slow things down a little bit. But if this was happening, let's say, in a spring market where they had another half rate drop, it would really spur on the economy.
But there's got to be a lot of bent up frustration right now.
There's a lot of frustration right now, and there's a lot of seller frustration right now too. Because even though things are starting to sell, there's a lot of sellers that have been on the market for a lot of months, and there's a lot of frustration. And what's going to happen in the spring? It's going to be kind of a double-edged sword where we're going to have people taking themselves off the market right now. Which, if you're on the market, I strongly disagree with. I think you should stay on the market. But there's going to be people taking their house off the market, getting ready to put it on. And most people that I hear is talking about March when they're going to put it back on. Well, now you have all these new listings hitting the market too. We could potentially have a bit of a glut of listings on the market. My hope is the rates are going to come down. Even though we're going to have a glut, they're going to be absorbed because we're going to get so many more people back into the market that a lot of these listings will be absorbed. And that's why I'm telling people, if you're thinking of getting on the market in spring, I would beat the spring rush, and I would get it on in Feb is when I would definitely get my house on the market to beat that. But
I make plans to do that now.
I would make plans to do that now. But like I said, I do think we are going to have a bit of a glut on the market come our sort of mid-spring market in March and April. And I'm hoping that with the rates coming down, we will get a lot of absorption of those listings because we have more people coming into the market. Last year, we didn't have anyone coming into the market, and we still had that spring rush of people hitting the markets. That's what slowed down the market a little bit. Whereas this year, it might be very different. Rates drop, people come back in, listings get absorbed. So I'm not too worried about the glut that's probably going to hit the market in March and April.
Can we all agree that Sean and Greg make the most sense in this segment?
I think so too. You know the beauty of Reader not talking just makes the show that much better.
Time flies.
Yeah.
521 on Talk, 521-8255. We'll be right back. Well, with all the HST we're going to save and that extra $250, where can I invest it?
I guess
HST
I get the
free, no?
HST free, yeah.
The investments, you don't pay HST on.
Well, you do pay your tax, so you do pay your tax. Well, and that's the great thing about making money, and
if you're paying tax, you're doing the right thing. Yeah,
that's the reality of things, and no, for sure. So, and you know what? Just listening to Paul and Frank talk, and
brilliant,
I was going to say it certainly is, and I didn't get an opportunity to pipe up here, but you know what? Listening to that, and I look at how simple our investment is. Obviously investing in private mortgages and real estate in Ottawa, we take a lot of that out. It's a turnkey investment that our investors enjoy.
And you don't have to worry about it, right?
Yeah, exactly.
Once you're in, you're in.
And that's our job is to worry about the files and the deals that we do on a day-to-day basis, but it truly takes a lot of that away. And, when you talk about the consistency of the return, we just had our audited reports done, and we returned 8.14 to our investors for fiscal 2024. And consistently, since inception of just over 10 years, it's 7.65 a return for our investors. So it just shows the stability of the investment, eliminating a lot of the noise, I'll just call it, that takes place in the market.
Yeah, no volatility. You don't have to worry about it.
Yeah.
It's been steady every year for those 10 years.
It is. And it speaks so much to what we do in terms of Ottawa real estate, right? And we all know the strengths of Ottawa real estate in terms of, buying, sells, and we see some, what's a little downtick, Paul, in an Ottawa market historically. It's negligible compared to other markets in the country.
Oh, absolutely. I mean, we went down last year 5.5%, but when you look at
it was all January though.
Well, pretty much. But if you look at our markets historically, the last time we went down, it was less than 2%. It was in 93 or 94, whatever year it was. But it was early 90s, and last year we went down 5.5. We're making that ground up. We're not making up the 5.5 this year. But yeah, you're right. Like an Ottawa market does not go down very often.
No.
But even with all the changes in the real estate market over the last 5 years, your rate of return has remained steady. So how do you account for the differences in the market, and yet your return is steady?
Well, that's the joy of being a private mortgage lender. You're servicing a need, and those needs will change over time, right? Those needs that people need private financing, they're going to change and fluctuate over time. We all know as well when there's changes in policies when it comes to mortgage lending, increase in interest rates, there's always individuals and people that sit out on the sidelines. But there are also people that still need that opportunity from private lending and private financing, and that's where we fill that gap. So as things sort of fluctuate throughout time, we are certainly able to, maneuver and be able to fill that void for people that keeps them out on the sidelines, as opposed to maybe selling their house or able to refinance, fix up their situation, and then move on to a traditional lender.
Also says something to the people that you give those mortgages to.
Yeah.
You got the pick of the litter.
We certainly do. And our portfolio speaks to itself. It's consistent over time. Our average credit score is just under 740 consistently. It fluctuates from 735 to 745 over time if you look that up.
So it's more circumstance that people are coming to you for these mortgages.
100%. Yeah.
Reader, let's say 3 years ago up to about 10 years ago, if you would have sat here and you would have said, get involved in private mortgages, I would have said, well, I would invest in real estate, getting indoors and stuff like that. And I would have been probably, 80% real estate doors, 20% private mortgages. Over time, that's waned a little bit where I'm like, you know what? Tenants are a nightmare. Yeah. They're a nightmare. Yeah. I'm like 50% real estate, 50% private mortgages because you
don't have to worry about it.
It's an easy investment, and you don't have to worry about tenants who have all the rights and they're nightmares, a lot of them. No, let me rephrase that so I don't have any backlash. They're not all nightmares. Some are nightmares.
You have some, but if you get those nightmares...
It's impossible to get them out.
It's devastating. It's devastating to most people where they'll never, ever, ever own an investment property again. Once it happens once to you, you are spurned for life.
Yeah.
You just
and don't get me wrong, there's some amazing tenants out there, and it's a great way to build wealth investing in Ottawa real estate. So I strongly recommend it, but I also strongly recommend private mortgages.
Yeah. So. You got to have the stomach for it, right?
Well, not private mortgages. It's easy, to be a landlord, you have to have a stomach. And I know some people that are rushing in to get their tenants because they don't want vacancy for a month. I'm like, I would not rush in. I don't care if you have a vacancy for 2 months. I would get the right tenant because if you get the wrong tenant, not only will you have them sitting in your house, but you'll have them sitting in your house not paying any rent.
Do you see them ever revisiting landlord rights?
Well, it's in Canada, it's very different. You go out to Alberta, and the landlords have all the rights, meaning like...
It's still Canada.
I'm sorry, what did I say? Different parts of Canada. That's what I'm saying. Did I not say that?
No, you said
You did.
In Canada.
Oh, sorry. I meant to say different parts of Canada are totally different. Like in Alberta, the landlords have all the rights. So, Steve, I don't like you and you're paying $1,200. You know what? You're going to pay $17 now. Like, I don't agree with that. I don't agree with landlords should have all the rights.
No, but you shouldn't be able to sit there for a year without paying a dime.
No. And even if I decide I want to sell one of my investment properties, and I'm like, put it on the market and it sells and someone's about to move into it, I got to give my tenant 1 month's rent. Now, there's a lot of tenants that are like, no, I'm not moving out. I'd like more. And they have all the rights, right? Yeah. So they're like, I heard people selling, paying their tenant 3, 4, 5, 6 months rent just to get them out of the house, sometimes even more. So it's definitely swayed in the tenant's favor. I don't believe it should sway in the tenant's favor, and I don't believe it should be 50-50. I think the landlord should have some good rights, and the tenants should have some good rights. But unfortunately, it's just not that way right now. And that's why I say if you're going to buy an investment property, which I still strongly recommend, I would 100% make sure you spend your time to get the exact perfect tenant who's going to take care of that place and treat it like their own. Because if you don't, it's a nightmare.
And credit check.
And reference check. And
the references really make a difference.
But hold on. But here's what you do with a reference check. I don't care about the last place you're coming from because most likely they want to get you out because you're a nightmare and they'll say whatever they want. I want the one before that. I want to know what the landlord two houses ago, what they say about you.
They won't remember.
Well, no, that's where the truth will come out.
They'll tell you, I can't remember their info. I don't know. I don't have it anymore.
Well, if they're bad, they'll remember.
If they're bad. If they're bad, they won't remember.
But if you have a tenant,
they don't want to give you that reference.
But if you have a tenant who you really want out of your house and someone calls for a reference check, most people are going to be like, oh, they're awesome.
Yeah, the best.
Oh, they're the best. Take them on. But you know what? If you call someone who had them 2 places ago and ask for their opinion, they'll say, you know what? They're a nightmare. Absolute nightmare. So
now, I know your website has a lot of information for people who want to invest, but who could they call?
Well, they can call us directly. Myself, Mike Hapke. We can always answer those calls at 613-656-0017.
Or Hapke's, what's Hapke's home address and home number? Let's give out Hapke's number.
Cell number. There is no home number.
Yeah. No, and you know what, though, Paul, you make such a great point about, and I want to differentiate between investing in private mortgages as well, right? So as a MIC, as a mortgage investment corporation, we're pooling the funds of our investors. And a lot of the same discussions that you just had about tenants if you do a private mortgage where it's a one-to-one, and I facilitate a lot of calls where people don't know the difference between investing in a mortgage investment corp or investing in private one-to-one mortgages, a lot of those same issues come into play when you do a private one-to-one mortgage.
You're at the mercy of that one person, right?
Exactly, right? So if that person doesn't pay, you assume, let's say, being the landlord, and I don't want to go too far down into that, a lot of those same issues come into play as that mortgage lender.
And so you guys take all the pools, you invest in all sorts of mortgages. That's what people are investing in, is a number of mortgages.
Yeah. Right now we're roughly 160 mortgages, let's call it, $80 million that we have out there in mortgages that are secured, just like any traditional mortgage. They're secured against the property. And if there is ever any issues with payments or that's what our servicing team does. We take care of that. We pull the borrower payments. If you're doing a one-to-one mortgage, that comes onto your responsibility. Maybe you have a lawyer do it and whatnot. But again, there's still some responsibility that you would have to do. So it's a totally different conversation that I have with people. Sometimes they call and they don't know the difference between the two, and we try to explain that.
521-TALK, 521-8255. We will be right back. 33 days left until Christmas. Got all your shopping done? You're waiting for the big GST rebate.
I'm waiting for the 14th of December. Well, again, it's going to impact Black Friday sales, I think, this week. I mean, I don't know. If you're buying a big-ticket item like a TV or something.
Yeah, unless it's...
I don't know. Maybe I'd wait for Boxing Day specials to do it, which are similar to Black Friday ones. So it's going to impact retailers. How much work is there going to be for retailers to adjust all their cash registers, to adjust everything? I mean... I don't know.
Same with online, right? If you're buying online, it's the same thing.
But Frank, it's just like I saw something on the news yesterday. It was like a little, it was a kid's clothing, apparel, accessory type of store, and she's like, I got 1,000 ticket items here, and 400 of them don't apply. 300 of them do apply. This ones I don't even know if they apply. So she's like, I'm going through 1,000 of my SKUs trying to decide which applies and which doesn't apply. She goes, the work it's going to be just for me to see if I save some
for 6 weeks,
for 6
it is, 8 weeks.
She goes, it's going to be a nightmare for me to go through all my SKUs to see what's relevant and what's not relevant. So I think it's going to be a nightmare, and I think it's going to impact the economy more than we think it's going to impact in a negative way.
Yeah, all for 2 months.
Yeah.
Again, I mean, that's what I don't like about it, like this 2-month thing. I mean, it just
If you're going to do it.
Makes sense. Just do it.
They will. It's going to extend. It will extend, in my opinion.
Now, a question for you. Why is the 3- and 5-year rate the same and the 4-year rate more?
Well, that's bond markets dictate that. So the bond markets are...
But why the skip in one? Doesn't make
Not sure. I think from a profit margin, again, the banks are looking at this very carefully these days.
No.
And the bonds, they follow the bonds, and they also follow the trends. So most Canadians like the 3 and the 5 year. You would think that if history repeats itself, election years, interest rates tend to be lower. So if that was the case, then why wouldn't Canadians be choosing a 4-year? That's how the banks dictate things.
Which is why I'm asking, because is that a coincidence?
Well, so the bank is basically saying, we don't want you to take a 4-year, right?
Correct.
Yeah.
Correct. So they'd rather you take a 5-year or a 3-year. Now, we've seen a lot of 3 years this year. So again, with interest rates likely coming down, we've seen a lot of Canadians opt to go with the 3-year more than the 5-year. Because, again, they feel like interest rates will likely be lower 3 years from now, and why lock in for 5 years? Where the risk is right now is, again, I mean, I think that if fixed rates don't come down until next year, then, the banks are going to do a better job of getting people to lock in, especially now. So now you've got the banks calling people saying, I don't know if you've noticed, but the rates are starting to creep back up. Even though it's likely temporary, I mean, they could continue to go up, but it's likely temporary.
Only the
They're
fixed.
using that. Fixed. They're using that to their advantage to lock people in now and getting people to get out of their 2.99 that's got 4 more months left on it. And they're saying interest rates could continue to go up. Maybe it makes sense for you to early renew now and lock into today's rates before 4 months from now they're going to be half a point higher potentially. So I'm not a fan of that stuff, obviously. I'm a fan of if you've got a really good interest rate and the likelihood, I mean, there's a better chance of fixed rates coming down in 4 months than there is going up. If that's the case, then why wouldn't you keep your low interest rate for the next 4 months and then take your chances with a fixed rate 4 months from now?
Is there any scenario, Frank, where you see that anyone who's coming off a rate, fixed or variable, in the next year to 18 months that they're going to get a better rate than they already have? The answer to that is absolutely not.
I don't think so, because now we're hitting the pandemic days. So now we're hitting the beginning of pandemic. And by the way, just to go back on the previous thought, if you have 4 months left on your mortgage and your bank is saying you have to early renew now, pick up the phone and call a mortgage broker now, because they're going to be able to take your application, lock in your rate as of today. So if rates are going up, you're going to get a rate guarantee. But with your existing bank, you don't get that rate guarantee. Your existing bank says you either got to make a decision now or you got to take a risk. Well, then that's a win for them. You want to win for yourself? You pick up the phone, you call a mortgage broker, and you say, hey, my mortgage is up in 4 months. I'm afraid that rates are going to go up. And then a mortgage broker will be able to secure today's rates for you for the next 4 months until your maturity date.
Can you get both the rates and the variance?
Well, the variance is the key on a variable.
Can you get them
people
both?
Say, well, we don't lock it. Yeah, of course we could. Yeah. So in some cases, some lenders say to us, well, no, you got to choose one or the other. It's like, all right, well, then I'm just going to go to another lender and get the other one. Whoever's got the best variable, adjustable, I'm going to choose them to secure the rate. And then who's ever got the best fixed, I'll use them to secure the fixed. And then as we get closer to maturity date, we pick one or the other. It's not what we want to do, because we want to reward our lenders for underwriting a file and giving us an approval. But if they force our hand into, I've always said to lenders, I'm always going to do what's best for my client. I apologize. I want to be loyal to you, and I want you to keep your efficiencies. I get that, but I got to do what's best for my client. So if you are not willing to lock in both for me, then I'll take one from you, and then I'm going to take one from another lender, and then you got a 50-50 chance of getting that deal come maturity time, and that's just the way it works. So,
And what are we at now? Prime minus what?
Prime minus 85, prime minus 90. We have a lender. We just secured a lender at prime minus 90 across the board, so it doesn't have to be high ratio. It doesn't have to be less than 20% down or more than 35%, even available on a 30-year amortization now. So we just got that this week. So.
And what causes that to change, and do you see it changing?
Well,
it's already changed.
Yeah, we've already seen prime minus 90, prime minus 95. Prime minus 95. Now we're seeing prime minus 85. We've seen some lenders at prime minus 80. Banks start at prime minus 30, prime minus 35, and then you got to negotiate your way up to competitive rates. But
what causes that to change, though?
Greed, profit. Like there really isn't.
And knowledge. People don't know.
Well,
it's not economy driven, though. It's just whatever they choose to.
Well, the markets drive it, but the markets have indicated that really there's only one reason that they've gone from prime minus 90 to prime minus 85 is they're looking to increase their profit margin, because more Canadians are going towards that product, and they make more money on the fixed. Their spread is bigger on the fixed. Their spread is a little less on the adjustable variable rate, but if they start seeing more people go towards it, sometimes they'll lower it a little bit to put themselves in a more profitable position.
And so before they dropped the rates 0.5%, I had prime minus 0.95. Then they dropped to 50%, and now they go prime minus 0.85. So they try to squeeze a little bit out of it, right? Like they took away the variance a little bit on those rates.
So you can guarantee that for how long now?
120 days, same thing. So again, we can get that variance. So on an adjustable rate mortgage, we don't guarantee the rate, we guarantee the variance. So if we can get prime minus 95, you have prime minus 95 for 120 days. Whatever happens with prime is what happens with that rate.
And what do you think is going to happen to prime over the next 120 days?
Well, I still think he's in a good position to do 0.5%. There's a couple of more reports that are going to come out. A GDP report's going to come out.
120 days, that's 3 visits, right?
That's 3 visits, because there's March 11th is 4 months from now, and then there's January 29th and December 11th.
So where do you think we're going to be 3 months from now? If you can get prime minus 95, and then 3 months from now the rate might be...
Well, my thinking was going to be half quarter. Now it could be half quarter. So either way, I mean, we should be 1%. Either 5.2 or 4.95 would be the prime rate. So if you're getting prime minus 85, prime minus 90, then you're going to be in the low 4s. Maybe the high 3s, if prime goes down that extra quarter point.
That's tempered a little bit too, because at one point it was almost a lock that we were getting 0.5 in December, 0.5 in January, and then you were saying a bunch of quarter points. So we should be at least 1% by the time that 120-day
by March.
By March we should be at bare minimum 1%.
Yeah,
I would
so
think.
Then we'd be at 4.95 on prime, where today's 5.95. So again, not horrible. And now we'd only be 1% off where we were pre-pandemic. Pre-pandemic, prime rate was 3.95. And by the way, pre-pandemic, the numbers were much better. Unemployment wasn't as high as it is today. It was lower. GDP was better than it is today. And, the only thing that's going to suffer right now is the Canadian dollar. The Canadian dollar,
which is horrible now and getting worse.
Yeah, it's getting worse.
Isn't it 0.14 something like that? Isn't it?
No, well, it's 70 cents, 72,
it's
right?
More than that, is it not?
No, it's down to 70 cents.
Yeah.
It's down to 70. It's been at 72, 73, 74.
Yeah.
For
After
most
Trump,
of the
it really
last
took a
12
dump.
Yeah, I know.
Yeah.
I know.
Yeah. Anybody in the stock market's done well over the last
3-4
4 weeks because, Trump, based on him being in there, the stock market has done very well. But that's going to temper at some point, too. It's not able to continue going at that pace.
Yeah.
So
too much volatility. Is that your phone?
No, it's not my phone.
No,
Could
that's
be-
mine
could be
reminding me of the birthdays.
Oh, is that what yours does?
That's what it does. It reminds me of whose
Damn,
birthday
Greg, do we
it
have
is.
any birthdays? Get on that.
When you get to Frank's age,
Yes.
What Frank does, he just goes through Facebook and looks for anyone's
No,
birthday.
no. I
My
forget
good friend,
more than I
Duka Shmuka
remember.
Luka, is turning 62 today.
Duka Shmuka Luka.
Well,
Anything
for
with
Frank,
a
it's more Alfonso.
521-TALK, 521-8255. We will be right back. Welcome back. As of October, we need a little bit less to buy a house now in Canada.
Yeah, that was a good number, eh?
Yeah.
Now, again, the interest rates have come down, and, again, the houses, depending. This is Canada-wide that they really outlaid. And
Now, here's what you need to make if you live in Vancouver.
It's still a lot.
20% down. You need to make $214,000.
It's crazy, isn't it?
Toronto, 195. Ottawa, 123.7.
Still a lot.
That's family income.
Yeah.
Yeah.
Yeah,
So how many first-time buyers are making $123,000?
very few.
Well, couples, it's not that hard, I don't think. Again, if you're not making that, you're not in a position to buy a home. I had a lady call me this week, and, she's saying, well, I pay $2,100 in rent, so I should be able to get a mortgage with a mortgage payment of $2,100. And I said to her, well, it's not that simple. It's based on your income, and it's based on the fact that you also have to have, when you're renting, if something goes wrong with the house, it's not your responsibility. When you own a home, it's your responsibility. So if your
Plus
roof,
tax, plus insurance,
your windows, your doors, your furnace goes, well, now you have to have money for it. So they look at that, not to mention the fact that when banks and lenders lend when it comes to mortgages, they have to be ultra responsible. No different at the MIC. There has to be responsibility there. One of the things at the MIC is what's the exit strategy? Like when you do private lending, there has to be an exit strategy. You just can't lend money and continue to lend money and continue to lend money, and the person never really gets ahead. The whole purpose of the MIC is to be temporary. No different with the banks. They want to be long-term, but they also want to make sure that they get their money. And because they never, ever, ever want to send a letter and send legal to kick a family out of a house. That doesn't look good on them. You make $12 billion a year in profit, and you're kicking a family out of the house. That's not good. So that's why they have to
Plus, they don't want to sell homes.
They don't want to
They don't want to own homes.
Yeah.
But they have to be responsible to Canadians. The government makes them be responsible. You cannot be lending. So we are going to see some rule changes in the mortgages, and I can tell you it's starting in January, and I talked about it briefly in the summer. It's called LTI, so loan to income, where banks are going to be told you can only lend to 4.5 times someone's income when it comes to a mortgage. So,
And what is it now?
well, it could vary. It could be as much as high as 5 or 6%, depending on the circumstances. If somebody has a lot of RSPs, a lot of money in a bank account, there's net worth programs. So there's a whole bunch of other things. But generally speaking, it's 4 to 5 times anyway. Where it gets interesting, and this is where it's going to hit you, Paul, is when it becomes investment properties. That's when you exceed the 4.5, because it doesn't take investment properties and mortgages out of the equation. So if you're buying an investment property and you qualify for it based on rental income, but it exceeds the 4.5. So what this does, it makes it tougher for investors to get mortgages moving forward, because the bank is going to be allotted a certain percentage of mortgages that exceed that 4.5. So they have to be very careful in who they give those mortgages to. So we're going to start to see mortgage underwriting get even tighter as we go forward.
And the thinking behind this is?
The thinking of this is? Well, again, you can look at it in many ways. There are countries that are doing this type of thing, Australia being one of them, and it's proven to be very successful. So in other words, it eliminates a lot of the risk from the banks, and it allows Australians, and in our case it'll be Canadians, to be able to get into their homes and know that they're qualified to be in there. The other thing it's done in Australia, it's made it tougher for investors to buy homes so that the homes are there for people who actually want to live in them, as opposed to rich getting richer. So that's the other part that it takes care of.
Australia is very much, because my sister lives there, very much like Alberta. the landlords control everything there. Like, they decide what they want to do. They can kick you out. They can do whatever.
But tougher to
they
get a
want.
mortgage now. Like in Australia, you have to have a 35% down payment to get a mortgage on an investment property. So you can't buy it with 20% down. So again, I mean, they've got it figured out, and it feels like OSFI and our government for housing is looking at that model and saying that's a pretty good model to go with. Let's start implementing some of the changes here in Canada. So we're going to go along with that model.
Do you see any other government regs changing for mortgages?
Well, it's election year, right? So we already saw the 30-year.
We'll have some broken promises come. Don't worry.
Well, then interrupt the question now.
No. Mr. Interruption.
That's not usually me, by the way.
30-year AM. I mean, we saw it now open up to new starting December 15th. So again, you get GST the 14th. We get the 30-year AM on the 15th. Who knows what's going to happen on the 16th? But you know, I mean, we're already starting to see first-time home buyers reach out and say, okay, so I'm getting close. We had one this week that wanted to put an offer on a house. We said, go ahead and put it, but I don't get the 30-year. I said, but doesn't mean that you won't get it. I just can't give it to you now. I can prove you based on a 25-year amortization, but because your closing date is the end of January, on the 15th of December, I can resubmit it to the lender and get the lender to resubmit it to the insurer and now get it approved based on a 30-year amortization. So you could buy a house now, but if you want a formal approval, you need to qualify on the 25-year, and then in middle of December, we can amend it to the 30-year amortization if you qualify for it. So if anybody's buying from a builder like Clement Homes, they would automatically get the 30-year amortization because it's a new build on December 15th. If you're a first-time home buyer or any one of, so in other words, if one of the parties is a first-time home buyer, but the person that you're buying with has owned a home before, you qualify as a first-time home buyer. Therefore, you can buy a resale home as well and get a 30-year amortization.
Even if both names are on title.
Even if both names are on the title, as long as one of them is a first-time home buyer.
Any other changes you see coming, or what do you want to
Well, we saw the stress test switch happen this week. I went into force this week where you don't have to qualify with the stress test if your mortgage is coming up for renewal.
Yeah.
Doesn't mean that you still don't have to qualify. You still have to qualify to switch lenders, but at least it gives you the opportunity to be more competitive and be able to challenge your existing lender if they're not giving you a competitive rate to be able to go somewhere else. So that works out well for consumers as well.
Birthdays? Right, Paul, do you have any for Frank?
Would you like to go, Frank? Frank, would you like to go first? I have a couple. One of my agents, Raj, celebrated a birthday this week, and one of my great agents, Paul Deek, actually has been with the company as of today for 4 years, and also
in a row.
And also my condolences. I've had a couple agents this week. One whose mother passed away, another one whose mother-in-law or stepmother, passed away. So my condolences to those.
Way
two.
Too many of those, now.
Yeah.
Like this will be 8 straight weeks that I go to either a wake or a funeral. Wow. Like it's crazy.
It's a lot. Yeah,
it's a lot right now. We're seeing a lot of it right now.
Welcome to getting older.
Yep. Birthdays to my good friend Joe Ranieri, who celebrated his birthday on Monday, and my beautiful niece Bianca, who celebrates her birthday on Monday, is this coming Monday. And you know what? Fellow mortgage broker, but really good person. Love him. Chris Allard celebrating his birthday today. So happy birthday to Chris.
Happy birthday. Anything, Reader? Anything,
Sean,
Greg? Any birthdays?
Just a wealth of knowledge, especially yourself, Steve.
Well, Steve is actually smarter because of Frank and I,
Oh, no doubt. No doubt.
Yeah.
It's rubbing off on me here for the last 2 weeks.
Actually, I don't want to use Steve as the barometer, actually.
How do we get a hold of you, Sean?
613-656-0017.
Email?
Sean R., so SEAN, at advancedgroup.ca.
Paul?
Yes, that's my name.
How do we get a hold of you?
Well, I even say Paul at paulrushforth.com.
788-2122. There you go.
Frank N.
Again, at mortgagebrokersottawa.com.
God.
So there you go. Just go to our website. Lots of information there. Lots of, again, you can get access to the MIC on our website as well. And look for some more news to come out this week as we head towards December 11th and cross our fingers, a half-point discount on Bank of Canada. That's what we're hoping.
Have a great week.
Have a great week. Support local business and charities, everyone.